Have you always wanted to get to know Bitcoin up close but had no one to ask? Have you hesitated to invest despite being intrigued? Stay right here and discover the potential of Bitcoin, what backs it, its global reach, future forecasts, and many more insights straight from Michael Saylor, the CEO of MSTR. In a presentation he delivered to the new administration's senior officials, he explained everything simply and straightforwardly. Watch until the end to uncover all the facts and answers about the Bitcoin phenomenon captivating the world. I'm Roy from Financial Intake, and we've got plenty of data to dive into, so let's get started. If you find value in this video, please give it a like, share it, and subscribe to the channel for more videos and updates on US stock market earnings reports. Let's jump right in. The financial world is grappling with a dual inflation problem, consumer and monetary. The chart shows that monetary inflation has averaged above 15% annually over the last 14 years, while consumer inflation hovers around 2 to 3%. For investors, this creates a critical challenge, preserving and growing wealth in an environment where most traditional assets fail to keep pace with monetary devaluation. Look at asset performance. Only a handful of asset classes, such as the NASDAQ 100 and US growth stocks, have outperformed monetary inflation. However, even these options come with high volatility and significant risks. What does this mean for the average investor? It highlights the urgent need for an asset like Bitcoin, a decentralized deflationary alternative, to hedge against inflation. For institutional investors, the bar is even higher. As one slide states, institutional interest and liquidity begin to dissipate if a company cannot grow organically by at least 15% annually. This sets the stage for Bitcoin as a growth-oriented asset class. Unlike traditional investments, Bitcoin offers unparalleled scalability and the potential to outperform these high benchmarks due to its unique properties as a digital asset. Traditional treasury strategies are also under scrutiny. Holding sovereign debt often underperforms the cost of capital by as much as 10% annually, eroding shareholder value. Bitcoin provides a revolutionary alternative for corporate treasuries in this context, as demonstrated by companies like MicroStrategy under Michael Saylor's leadership. By allocating significant reserves to Bitcoin, these companies hedge against inflation and position themselves for long-term growth. The economic problem is clear. Traditional strategies are falling short in the face of rising inflation and devaluation. Bitcoin stands out as a transformative solution, offering a decentralized, inflation-resistant asset that can help individuals and institutions alike navigate these challenges. Chaos and entropy are not just abstract ideas. They have real financial costs. As the slide highlights, factors such as inflation, political instability, war, and global competition cost the global economy trillions of dollars every year. These forces erode wealth, create uncertainty, and make it harder for individuals and institutions to preserve value over time. Traditional financial systems struggle to mitigate these costs, leaving investors searching for alternatives. One of the most significant challenges in today's economy is capital preservation. The second slide illustrates this beautifully, showing a spectrum of assets, from short-term consumption goods to long-term capital assets. Consumption assets like luxury cars or yachts lose value almost instantly, while capital assets like real estate and gold hold value longer. But even these safe options are not immune to inflation and economic entropy. This is where Bitcoin stands apart. With its deflationary nature, Bitcoin offers an asset that resists inflation and thrives in chaotic environments. What makes Bitcoin unique in this equation? Unlike traditional assets, Bitcoin operates on a decentralized network, immune to geopolitical chaos, currency manipulation, and inflationary pressures. As we'll see in the next slides, its performance consistently outpaces inflation and other traditional asset classes. Bitcoin doesn't just store value, it protects it against the forces of entropy. The cost of entropy is an unavoidable reality in our modern economy, but it doesn't have to erode your financial future. Bitcoin offers a revolutionary way to preserve and grow wealth in the face of chaos and uncertainty. In the next segment, we'll dive into Bitcoin's extraordinary performance metrics and how it compares to other assets over time. Don't go anywhere. This is just the beginning. Welcome to one of the most transformative ideas of our time, digital capital. In this segment, we'll explore how Bitcoin is reshaping the definition of capital itself. Traditionally, capital assets like real estate, gold, or equities have dominated portfolios. However, Bitcoin, as a digital form of capital, offers a revolutionary alternative that is efficient, global, and designed for the 21st century. Let's dive into what makes Bitcoin compelling as a form of digital capital. Unlike physical assets, Bitcoin has no liabilities typically associated with owning property or other capital assets. Think about it. No property taxes, tenants to deal with, physical wear and tear, or regulatory red tape. Bitcoin is genuinely frictionless capital. It's invisible, indestructible, and immune to natural disasters or geopolitical risks. Unlike anything we've seen, its programmability makes it a financial tool, allowing investors to configure and manage it precisely. These qualities place Bitcoin in a league, bridging technology and wealth preservation. Next, consider Bitcoin's global nature. Unlike traditional assets tied to a specific region or jurisdiction, Bitcoin transcends borders. It serves as a universal currency and capital asset that doesn't require trust in governments or corporations. Whether you're in North America, Africa, or Asia, Bitcoin offers the same value proposition: secure, decentralized ownership without intermediaries. This makes it superior to foreign debt, equity, and even fiat currencies, as it eliminates counterparty risks. Finally, let's look at Bitcoin's role in capital preservation. Traditional assets like consumption goods, real estate, and even gold face the challenges of depreciation, regulation, or long-term inefficiency. Bitcoin, on the other hand, represents a groundbreaking advance. It shifts us from physical assets that degrade over time to digital assets that are immune to entropy. Imagine capital that not only retains its value over decades, but over centuries. With Bitcoin, saving isn't just for the next generation, it's for the next millennium. Digital capital isn't just a financial tool, it's a paradigm shift. As the world becomes increasingly digital, Bitcoin is positioned to become the cornerstone of modern wealth. In the next segment, we'll continue this journey, diving deeper into how Bitcoin outpaces traditional asset classes and the implications for global finance. Stay tuned. Bitcoin is often misunderstood as a digital currency backed by nothing, but the reality is far more complex and intriguing. In this segment, we explore the multifaceted elements that provide Bitcoin its inherent value and its robust support system. Let's dive in. Bitcoin has emerged as the dominant digital monetary network, reshaping how we think about value transfer, storage, and creation. Unlike traditional currencies, Bitcoin isn't reliant on a central bank or government. Instead, its power stems from its global decentralized network, underpinned by cutting-edge technology and widespread adoption. This unparalleled structure ensures its position as a leading force in the digital economy. Today, Bitcoin ranks as the seventh largest asset globally by market capitalization, surpassing giants like Silver and Saudi Aramco. With a market value exceeding $1.8 trillion, Bitcoin has become a widely recognized and held asset, drawing interest from institutional investors, corporations, and individuals alike. This growth is a testament to its compelling case as a modern store of value. Bitcoin's presence in the financial markets continues to expand, with US spot Bitcoin ETFs now managing over $90 billion in assets under management. These ETFs provide a bridge for traditional investors to access Bitcoin's growth potential, bringing mainstream validation to the digital asset class. In a groundbreaking development, BlackRock's Bitcoin ETF has overtaken its gold ETF in net assets, marking a significant shift in investor sentiment. This milestone highlights the growing trust and appeal of Bitcoin as a modern alternative to traditional safe haven assets like gold. Bitcoin ETFs are outperforming traditional bond ETFs and are making their way into the classic 60-40 investment portfolio. As Bitcoin continues to deliver substantial year-to-date returns, its allocation within portfolios is poised to grow, with projections suggesting an increase from 1 to 3% to as high as 10-20% in the coming years. From ETFs and private companies to public corporations and even countries, Bitcoin's reach spans a diverse array of entities. Collectively, these stakeholders hold over 2.5 million Bitcoins, valued at $219 billion, further reinforcing the network's strength and trust. Bitcoin represents a convergence of digital, political, and economic power. With 733 exahash in computing power, 18.33 gigawatts of energy usage, and 850 billion invested, the Bitcoin network is a monumental force. Its adoption spans over 220 million holders, integrating deeply into the global financial ecosystem. Bitcoin stands as the world's most powerful cryptocurrency network. Its unmatched support system spans regulatory frameworks, technical innovations, computer and electrical power, and political backing. This comprehensive foundation ensures Bitcoin's enduring dominance. Of the top 20 ETFs launched in 2024, 12 are tied to Bitcoin, Ethereum, or MicroStrategy. This dominance in new ETF products underscores Bitcoin's growing relevance in the investment world and its pivotal role in shaping the future of financial markets. So, what backs Bitcoin? The answer lies in its technology, network, adoption, and the trust of millions worldwide. Bitcoin isn't just backed by one entity. It's supported by a symphony of innovation, participation, and belief in a decentralized financial future. In the next segment, let's continue exploring how Bitcoin is reshaping our world. Bitcoin's global reach is expanding rapidly, with over 220 million holders worldwide and a 30% year-over-year growth in transaction volume. Today, more than 1 million merchants around the globe accept Bitcoin as a payment method, making it one of the fastest-growing digital currencies in history. This global adoption highlights Bitcoin's journey from niche technology to mainstream financial assets. Institutions are now fueling Bitcoin's ascent, with over 1 trillion in assets managed through Bitcoin ETFs. Public companies are embracing Bitcoin like never before, with more than 200 organizations holding it as a strategic asset. BlackRock's Bitcoin ETF, for example, has already surpassed its gold ETF in net assets, demonstrating the shift in institutional trust toward digital assets. At the heart of Bitcoin's strength lies its unparalleled network power. With a hash rate exceeding 733 exahashes and 18.33 gigawatts of energy driving the system, Bitcoin is not just the most secure monetary network, but also the most decentralized. This immense computational power ensures the integrity of every transaction, providing a robust foundation for a future built on Bitcoin. Governments and corporations alike are leading the way in Bitcoin investment. Countries like the United States, the United Kingdom, and China are adding Bitcoin to their reserves, while global corporations, including Tesla, SpaceX, and MicroStrategy, continue to make significant investments in the asset. This combined momentum from both the public and private sectors is propelling Bitcoin into a new era of growth and global dominance. The 21-year outlook for Bitcoin, presented as a macroeconomic and financial narrative, is compelling, forecasting a transformative shift in global asset allocation. Beginning with the open-source Bitcoin 24 model, a tool that predicts Bitcoin's adoption and growth over 2 decades, it is designed to evaluate strategies for individuals, corporations, and nation-states. The global asset map reveals Bitcoin's current modest valuation at 1.8 trillion in the 900 trillion market landscape, where real estate dominates with 330 trillion, followed by bonds at 300 trillion and equities at 115 trillion. Projections suggest an extraordinary expansion by 2045, with Bitcoin reaching $280 trillion in market capitalization, capturing 7% of global assets and driven by annual growth rates averaging 29%. In comparison, gold remains stable, art modestly grows, and equities achieve significant growth. Bonds and money markets see a relative decline in dominance, marking a shift towards equity and Bitcoin as primary asset classes. Under 3 scenarios, bearish, base, and bullish, Bitcoin's price per unit could range from $3 million to $49 million by 2045. The base case alone suggests a $13 million valuation per Bitcoin, reflecting a 22% asset allocation share in the bullish scenario. Such trajectories underscore Bitcoin's potential to reshape financial ecosystems, aligning with technology-driven shifts and institutional endorsement. The forecast concludes that macroeconomic dynamics will lead to substantial reallocations towards Bitcoin and equities, with a global asset total nearing $4 quadrillion by 2045, driven by innovation, policy shifts, and investor confidence in emerging digital monetary networks. Bitcoin stands poised as a cornerstone of this transformation, reshaping global financial landscapes. MicroStrategy's strategy centers around establishing itself as the ultimate Bitcoin treasury powerhouse, becoming the first and largest company to make Bitcoin its primary reserve asset. Their core principles for Bitcoin stewardship highlight a disciplined and transparent approach. MicroStrategy emphasizes buying and holding Bitcoin indefinitely in a secure manner, while prioritizing long-term value creation for its investors by integrating intelligent leverage into its operations. Their acquisition strategy aligns with achieving a positive Bitcoin yield while fostering rapid yet responsible growth amidst market fluctuations. By issuing innovative fixed income securities backed by Bitcoin, MicroStrategy has maintained a robust and healthy balance sheet, paving the way for a scalable business model. They also actively promote global Bitcoin adoption as a critical reserve asset in corporate treasuries, showcasing their commitment to fostering the cryptocurrency ecosystem. Their results have been nothing short of remarkable. Over 4 years, their Bitcoin-focused strategy has yielded a staggering $13.5 billion gain, as highlighted by their transparent tracking of Bitcoin portfolio performance. This consistent success is backed by their disciplined cost averaging strategy, purchasing Bitcoin at pivotal moments to maximize their position. MicroStrategy's success is evident when comparing asset performance. Their annualized return of 120% outperforms Bitcoin's 60%, eclipsing the Magnificent Seven's 29%, and dwarfing the S&P 500's 15%, real estate's 10%, gold's 6%, and bonds are 5%. The company stands tall as a model for Bitcoin integration and outshines top-performing S&P 500 stocks. While Nvidia has achieved an impressive 1,228% growth, MicroStrategy outpaces it with a monumental 2,085% increase since adopting its Bitcoin strategy. With their strategic leverage, MicroStrategy hasn't just matched Bitcoin's returns, they've exceeded them significantly. Their 2,785% growth since 2020 showcases the power of intelligent financial strategies, redefining how corporations can benefit from Bitcoin as a reserve asset. Their exceptional success places them as a benchmark for Bitcoin adoption, outperforming major indices and industry leaders like Nvidia, Tesla, and Google. MicroStrategy's stock exhibits higher volatility than any S&P 500 stock, standing at 123%. This unique volatility not only underscores the opportunities for substantial gains, but also aligns with its dynamic market position, significantly exceeding the figures of competitors like Dollar Tree at 83% and Tesla at 61%. MicroStrategy's volatility translates into significant liquidity and options open interest, a unique factor in its positioning. It holds an impressive $75 billion in options open interest and maintains 9.3% of daily traded volume as a percentage of its market cap, surpassing top companies like Enphase Energy and Tesla. This liquidity ensures accessibility and reflects market confidence in its financial instruments. MicroStrategy integrates BTC treasury operations with its reserves, blending traditional financial mechanisms with the cryptocurrency market. This structure, including high leverage through securities like MSTR options and equity, ensures its ability to manage, acquire, and sustain its Bitcoin reserves. With over 279,420 BTC valued at approximately $25 billion, it represents a robust and strategic treasury model. Drawing parallels to oil refining operations, MicroStrategy functions as a sophisticated entity managing its BTC reserves and leveraging financial instruments, akin to how energy companies refine crude oil. This analogy highlights its calculated approach to maximizing Bitcoin as an asset while maintaining operational efficiency. Convertible bonds issued by MicroStrategy demonstrate extraordinary performance, achieving 224% on 2025 bonds and 134% blended performance. These returns significantly outperform Bitcoin's appreciation of 70%, showcasing how the company's strategic bond issuances generate wealth beyond its direct Bitcoin holdings. Long-term BTC yield targets of MicroStrategy reflect a well-planned strategy, with a 26.4% BTC yield achieved in 2024, YTD and projections of 6 to 10% annually from 2025 onwards. This metric underscores its commitment to maximizing shareholder value through deliberate Bitcoin acquisition and retention. MicroStrategy plans to increase Bitcoin purchases exponentially, with projected acquisitions of $10 billion in 2025 and up to $18 billion by 2027. The split between equity and fixed income investments showcases a diversified and balanced approach to maintaining liquidity while expanding its BTC portfolio. This comprehensive breakdown emphasizes why MicroStrategy, with its innovative financial strategies and robust BTC integration, remains a compelling choice for investors seeking to capitalize on cryptocurrency's growth and volatility. Welcome to an era of transformation. The Red Wave, a movement poised to redefine Bitcoin's position in global markets and catalyze a new age for cryptocurrency adoption. As the US finds itself at the heart of this revolution, Bitcoin is not just a currency, it's a statement of financial independence. The lightning streaks symbolize the disruptive power of the decentralized currency, igniting change in an increasingly digitized economy. This vision aligns perfectly with pioneers like Elon Musk, who advocates for empowering individuals with greater control over their finances. The Red Wave isn't just about Bitcoin. It's about freedom, transparency, and a decentralized future. In July 2024, Donald Trump addressed the Bitcoin community, signaling the mainstreaming of cryptocurrency. His message reinforced the growing political will to embrace Bitcoin as a cornerstone of future economic policy, a pivotal moment in the red wave. The implications are groundbreaking, signaling a transformative shift for the crypto landscape. An end to the war on crypto paves the way for innovation while establishing a new digital assets framework creates a solid regulatory foundation. Accelerated institutional adoption opens the doors for large-scale investments, supported by favorable tax laws, encouraging crypto-driven economic growth. Moreover, introducing strategic Bitcoin reserves positions Bitcoin as a key financial asset for governments, marking a new era in digital finance. The red wave is driving monumental milestones in Bitcoin's institutional adoption. Fundamental changes include repealing restrictive laws like SAB 121, introducing Bitcoin ETFs with options trading capabilities, and fostering Bitcoin-backed banking systems that accept it as collateral. This vision, brought to life through vibrant imagery, showcases a future where institutions embrace crypto, seamlessly integrating it into the core of modern finance. The red wave marks the convergence of innovation, policy, and community. It's a financial shift and a global reawakening of economic independence and digital empowerment. Stay tuned as we dive deeper into this transformative era, the crypto renaissance. This section delves into how the financial world is witnessing a transformative revolution, shifting from traditional capital systems to a digital frontier led by Bitcoin and blockchain technology. Traditional capital markets are no longer meeting the needs of modern investors. Their reliance on outdated 20th century techniques has created inefficiencies and hindered progress. It's time for a fresh perspective. Going public has become prohibitively expensive, requiring countless lawyers, accountants, approvals, and years of preparation. The process stifles innovation and excludes countless businesses from the opportunity to grow and compete globally. Many public companies today are stagnant, unable to offer liquidity, raise capital, or take risks. Toxic capital, volatility, and inflation plague these organizations, leaving them unable to thrive in a dynamic global economy. The number of publicly listed companies in the US has plummeted over the years due to excessive regulations. These barriers hinder innovation and limit opportunities for diversity and economic expansion. Only 4,000 companies are listed in the US, a mere fraction of the potential. This exclusionary system serves less than 0.06% of American businesses, leaving millions of innovative ventures in the shadows. Under current regulations, creating a traditional security requires 4 years and $40 million. In stark contrast, a digital token can now be issued in just 4 hours at a cost of $40, unlocking endless possibilities for growth and inclusivity. To truly thrive, the financial world must embrace a robust digital assets framework. This involves redefining asset classes, setting ethical and economic guidelines, and providing practical legal pathways for the issuance and operation of digital assets. A well-structured framework ensures ethical practices, economic efficiency, and technological advancement. By embracing these principles, we can unlock a future where digital assets drive prosperity and inclusivity for all. Bitcoin represents the epitome of a digital commodity. Unlike traditional assets, it has no central issuer or governing body. Instead, it derives its value from digital power, validated and secured through blockchain technology. This positions Bitcoin as the modern gold, a store of value in an increasingly digital world. Let's take a look at digital securities. These are assets issued by organizations and backed by financial instruments like equities, debts, or derivatives. Digital securities combine the benefits of transparency and regulatory oversight while seamlessly integrating into modern digital financial systems. Digital currencies are a transformative category of assets, with issuers that are directly backed by fiat currencies. They provide a bridge between traditional money and the decentralized digital realm, streamlining global transactions in real time. Digital tokens revolutionize access to utilities and services. Unlike securities, they are fungible assets backed by issuers, but with specific digital functionalities, ranging from streaming platforms to membership perks. Non-fungible tokens redefine ownership in the digital age. These unique assets, supported by issuers, enable creators to tokenize art, music, and more, offering unmatched digital utility and value. Lastly, digital ABTs connect the physical and digital worlds. These tokens are backed by tangible assets like gold, oil, or agricultural commodities, Combining the stability of physical goods with the flexibility of digital trading, the Bitcoin Renaissance marks a pivotal shift in the financial landscape, breaking away from outdated and restrictive capital market systems. It highlights the inefficiencies and exclusivity of traditional structures, emphasizing the need for innovation, inclusivity, and adaptability. From digital commodities like Bitcoin to utility-driven tokens, NFTs, and asset-backed tokens, this renaissance reshapes how value is stored, exchanged, and utilized. With a new digital framework on the horizon, this era empowers individuals, institutions, and governments to embrace a decentralized and efficient financial ecosystem, unlocking unprecedented potential for growth, diversity, and innovation. Digital assets framework and rules. In this section, we'll explore the essential guidelines that govern the governance of digital assets, ensuring secure, efficient, and scalable financial systems for the future. How can corporations create and operate stablecoins backed by USD reserves, enabling seamless, instant global transactions? The acid test here is simple. Imagine a company like Tether establishing its headquarters in the United States to meet these regulatory benchmarks. Let's discuss digital securities. How can a company like Apple make its shares available for trading 24/7, 365 globally? And how can shareholders access and manage their shares directly on their devices? A real-world test of this concept is MicroStrategy trading around the clock on Coinbase. Imagine a European in Japan transferring a share of Apple stock to an American in Argentina using just their smartphone on a Saturday. This highlights the potential of digital exchanges to operate seamlessly, with the acid test being the ability to convert and use currencies instantly for real-world needs. How can a small business issue securities worth millions globally within a few weeks, with minimal costs and no legal teams? The acid test here. Picture a scenario where you can invest in a promising startup without the traditional financial barriers. What if a celebrity could issue digital tokens offering unique privileges to their fans, like VIP access or exclusive content? This opens up a new world of possibilities for fan engagement, with the acid test being the ability to own tokens like Katy Perry coins seamlessly. How can corporations provide efficient crypto exchange services that allow anyone to issue, buy, sell, and transfer digital assets freely? A benchmark for success. Seeing a global player like Binance move its headquarters to the United States to meet these standards. By 2045, the crypto renaissance is expected to reshape global capital markets with a total value reaching $4 quadrillion. Bitcoin is projected to lead with $280 trillion, while digital equities, bonds, and currencies transform financial systems at an unprecedented scale. From $1 trillion in 2024 to $590 trillion by 2045, the digital transformation of financial assets is set to unlock enormous prosperity. Bitcoin's role alongside digital equity, bonds, and currencies will redefine economic landscapes worldwide. Digital assets are not just financial tools, they represent a transformative force in global economics. With robust frameworks and innovative rules, we can unlock their full potential, creating a more accessible, inclusive, and dynamic financial future. Imagine a world where Bitcoin, the world's first decentralized currency, becomes not just a tool for private investors, but a critical asset for nations. Welcome to the concept of the United States Strategic Bitcoin Reserve, a groundbreaking initiative designed to leverage the power of Bitcoin in shaping economic and geopolitical stability. In 2024, the Lummis Bill, or S4912, was introduced as a bold legislative proposal to establish a strategic Bitcoin reserve. With provisions to purchase up to 1 million Bitcoins over 5 years, the bill sets a precedent for integrating digital assets into national financial strategy. This reserve isn't just about economic gains, but peace and power. By embracing Bitcoin, the US aims to create a fair, equitable system to manage global political differences, fostering prosperity while cementing its leadership in the 21st century. Addressing the national deficit requires innovation. By channeling trillions of dollars of 20th century capital into Bitcoin, the US secures financial leadership and drives technological and economic progress for decades to come. Bitcoin strengthens the US dollar by maintaining its status as the world's reserve currency. A strategic Bitcoin reserve ensures that any shifts in global financial dynamics funnel back into the US economy, protecting its economic dominance. Beyond strategy, the reserve is about growth. It draws foreign capital to the US, creating jobs, empowering institutions, and boosting the prosperity of local and federal entities alike. Projections show a remarkable impact on national assets from the purchase of 1 million bitcoins under the Lummis Bill. By 2045, gross debt will reduce dramatically while assets will grow exponentially, showcasing Bitcoin's potential as a game-changing reserve. Strategic acquisitions aren't new to the US. Think of Manhattan in 1626 or the Louisiana Purchase 1803. These investments yielded unprecedented returns, proving that bold moves, like a Bitcoin reserve, lead to significant payoffs. The reserve doesn't stop at the Lummis Bill. Scenarios like Double Max or Trump Max highlight the potential of purchasing up to 4 million Bitcoins. By 2045, this could generate trillions in returns, positioning Bitcoin as the most significant investment of the century. In summary, the US Strategic Bitcoin Reserve is more than a financial maneuver, a vision for the future. The United States has become a global leader by leveraging Bitcoin, ensuring economic growth, innovation, and geopolitical stability for generations. If you've made it to the end, you now fully understand the potential of Bitcoin and the different characteristics that define its past, present, and future as an investment in this revolutionary currency that's taken the world by storm. Join the conversation about the future of digital assets and discover how initiatives like this are reshaping the world. If you found this insightful, don't forget to like, subscribe, and explore more groundbreaking ideas with us.